Well, good evening. It's Sunday night. Could get to it on Saturday for you guys. I'm alone. Dave's off today, so just me here. So hopefully you get some value out of this. We're preparing for week ahead here. So we've got the SPY daily chart I wanted to point out. And this was the start of the week Monday here where we had almost an inside day. It did poke a little bit above the high from Friday, that one-day wonder, and we did lift a little bit. But then Tuesday we had the CPI numbers, so that's where we really jumped. And for the rest of the week, even though we had PPI on Wednesday and a bunch of other Fed speak and so on, it stayed pretty much sideways there. So it's interesting that we're sitting just below the end of August, September highs, and looks like it could challenge that and maybe break through and possibly go and test the July high. So that's where we are with the SPY. Now with the Qs, they've already gotten above that August, September high, and sitting here with the July high, we tagged it on the CPI day. So we pulled back, or sorry, the PPI day, we tagged it, pulled back a little bit there on Thursday, Friday. And this is upcoming a big week here for equities, in the sense that if you look back historically, there's often been rallies during the Thanksgiving week. Wednesday often tends to be a very slow or light volume day, but it certainly can have a bullish slant to it because we're ahead of the holiday. So if you've journaled this over the years, you'll see that it's often the case, a little bit bullish action on Wednesday afternoon when volume's light. And then, of course, we're off on Thursday and then a half day Friday. So sitting in this spot here going into this week is very interesting, and likely that people looking at technicals may think it has to pull back, but there's no guarantee that it certainly could break higher and go into Cyber Monday on an elevated level. It's entirely possible. So sector performances for Friday and for the week. Energy did really well on Friday, but it was at the bottom of the pile for the week. So energy has been lagging, and consumer defensive also lagged because it was really a risk-on type of a week with the CPI giving such a big boost to the market. One of the reasons was, of course, the CME Fed Funds Watch, or Fed Watch tool, said that we have a pretty high probability of a interest rate cut in May, if not even in April. So we'll see how that plays out. But the markets really had that change of sentiment in the sense that, accounting for possibly a December hike and maybe rates to stay elevated for longer. What the CPI did is it said, hey, it doesn't look like there's going to be a hike in December, and we may even get a cut in the April to May timeframe. So real estate responded to that really well for the week. And that's just because if rates come down, maybe there'll be a surge in homes purchases, home starts, things like that. Basic materials benefited from the dollar that declined on the back of bonds rallying and yields falling. Utilities also do really well when rates are declining. So that's starting to get factored in now, because utilities have been way behind for the year on the back of rising rates and rates to stay elevated for longer. So consumer cyclical has both the Black Friday, sort of Cyber Monday seasonality to it, expecting consumers to maybe still be able to have purchasing power. It did really well on Friday there, even though market was kind of sideways. And so healthcare sliding both on the Friday and for the week as well. This is generally not the time of year where healthcare is that big of a bet. More in the technology and consumer spending area, cyclical stuff. And then, of course, with the catalysts that were going on, this is how we see the deck stacked here for the week. Looking at the market and sector ETFs, you can see the best performer was the IWM for the week. So we had two launches. We had the launch the beginning of the week, and then we had this launch here this week with small caps suddenly being in focus again for just a couple days of the week. That's produced that much. The thing is that the growth element, right? Like, is there growth expected? Can we cycle out of some of the stuff that's already run and put it into work? And this normally is one of the best performing months of the year for small caps, and historically, often from November to April, they do better. But they've been really suffering this, this past while, and even this month so far, just with these couple spurts, we've seen a rise. But Hughes had already had a pretty good run going into this week, and so there was a bit of a pop up on Tuesday with the CPI, but it was the other groups that were really trying to play catch up, I think. And of course, the real estate, as I said, the utilities, consumer discretionary, basic materials, those all put in really good performances. But again, if you roll to how's the month going or how's year to date going, that really tells the story. So we had everything green here for the week, which is great. And of course, a lot of times with market neutral and pair trading strategies, we're kind of indifferent anyway to the market, but it's nice to be able to use it if you can. The problem with this week was the gap up on Tuesday and then pretty much sideways for the rest of the week. So not a whole lot of action, and volatility seemed higher than it really was because the VIX was declining, but volatility seemed higher because there was a reshuffling of the deck of things that consumers had to deal with, or investors had to deal with, hey, wait a minute, we were thinking that inflation was still a problem. We were thinking that rates might get raised again in December. We were thinking that rates might stay elevated for longer, and all of a sudden the deck is shuffled, and what are we going to do? And so that's what you might have felt this week was the shuffling of the S&P 500 and broad market. Yeah. Here's the map of the market for the week that shows some of the things going on. So some of the stocks that had earnings might be the ones that were pounded down. But other than that, healthcare not doing as well, insurance not doing as well. Not that it's a sector, that's part of the financials, but and then medical devices was mixed, but definitely the drug manufacturers and healthcare didn't do as well as the medical devices and diagnostics, which has more of a technology bend to it. Energy lagging, but REITs doing well, utilities doing well, basic materials doing well. And then the semiconductors obviously doing well. NVIDIA had been the one that ran prior to this week and basically popped up a little bit on Tuesday with the CPI, but stayed sideways to slightly down off those highs. But the rest of the semis are holding up pretty well and still strong. Let's see, moving on. Russell, this is the Russell. There's your one-day wonders. You've had a few of them this last while here. So we had a big spurt in the Russell and then pulled back, and then another big spurt and kind of pulling back. So it's rough trying to trade the Russell to some degree because of this syncopation that you see. So I wouldn't put too much stock in it. It hasn't gotten above the 200-day MA. It tried, but it failed, and so it's sitting below it, whereas the other markets are above that. Here's the 10-year note. We can see again the big move on Tuesday and then kind of sideways after that. And here's the US dollar declining off of these highs. We did anticipate that it would go to try to tackle the 200-day SMA, and it did. And it's sitting right on that. So it certainly could bounce or it could break below it. So the trend is probably downward still because of the rate thing, bonds and interest rates, of course, signaling that, as well as Bank of Japan and possibly, some unwind of the carry trade, which is selling the dollar and putting it back into the yen or whatever. So there might be some of that going on. So I expect that we are over the hill on this one, and we'll either be sideways and choppy or possibly declining further. But it's already come down a pretty good amount here. So we're back to sort of the central point of tendency over this for this year so far. Crude, it's one of those things where it's been lagging, of course, everything else, and but it has these spurts every once in a while. We had a Thursday move, and then a little bit more on Friday, or was that? Sorry, I think that was that's today. So we had the Friday move, not the Thursday move, the Friday move, and then it's building on that now. But like we're still again below the 200. So not, I wouldn't get too bullish on it. It's back to kind of the consolidation point. I thought it might trade, back and forth at that 75 level, and it's probably going to do that. VIX declining, and we popped up slightly and declining further, but we fully expect that if this month remains bullish and going into December, of course, we've got the, December breadth, we've got Santa Claus rally, we have all kinds of things to look at. Not that there won't be some tax law selling, but look, it's a very different year than 2022. 2023, a lot of the tech stuff's been up, and would they want to, even the stuff that's lagged, that's not down a lot, it's just hasn't performed as well, what are they going to do, sell that? Probably not. Probably hold it for the next year, thinking, well, next year's the year that those will do better. So it's possible that VIX goes and tests the lows for the year and declines even further. We could be by April next year, if we don't get any other type of major catalysts that rock things around, we could even drift lower with all the AI influence and stuff like that. We might get down into the 10s or 12s or even 8s. Who knows? Economic calendar. And we don't have any seasonality this week, except for Friday. We start the last 5 days. But since Friday is a half day, it's not really reasonable to talk about it at this point. We'll next Sunday, we'll probably do a meeting. I don't think I'll be able to do it Saturday. So Sunday, if Dave's around, we will do a Sunday podcast, and we can include the 5-day seasonality, 3 days, last day, and the first trading day of the new month. And the first Friday would actually occur that week as well. So we'll touch on that. We'll just keep it shorter here tonight. Economic calendar, November 20th to 24th, looking at U.S. leading economic indicators on Monday at 10 a.m. We got some Fed speak, Tuesday existing homes, and then we have the minutes. Now, the minutes can be market moving. Don't think of it like, just because we already had that FOMC meeting and blah, blah. No, they can actually be moving the market. So what did it do last time? Did it pop the market up a little bit? Could that be a repeat again and add to it on Tuesday? Wednesday, we have initial jobless claims, durable goods, consumer sentiment for November. So there's something in there that might, if this consumer sentiment comes in okay, we may have that afternoon rally on Wednesday. which is ahead of Thanksgiving, when we expect light volume and a lot of people traveling and things like that. Then, of course, Thursday we're closed. And then Friday we have the half day. Markets close at 1 p.m. Eastern time. We've got PMI. Well, this is the S&P Flash U.S. Services PMI and Manufacturing PMI. So it's not quite as powerful as the PMI we had last week. Okay, and then upcoming earnings, we've got Best Buy, Dick's, Guess, Kohl's, Lowe's. So we got some real retail stuff to look at. Important this week, of course. And then we have the NVIDIA on the 21st on Tuesday. So this is probably the biggest thing that the market's looking at. And obviously the chips are looking at it. It says here, per S&P Global Market Intelligence, the average price target for NVIDIA is 641.88. This implies an upside of nearly 30% to current levels. Some upgrades you've seen as high as $700. As for NVIDIA's third quarter earnings report, which is due out after the close on Tuesday, analysts are anticipating a per profit of $310 compared to a year ago. Revenue is forecast to arrive at $14.9 billion, which is up 152% year over year. They have some new chips. They have, of course, the tailwinds from AI. The thing with their earnings, it'll be a good indicator to see what the adoption is and any other clues for the state of the union regarding the AI industry in general. I think that's a good takeaway from, all this. So it's not just about NVIDIA, it's a reflection on, where things are at with AI. And of course, they have already had a pretty good run this year as one of the top stock for the year in terms of performance, right? So everything else is trying to catch up, I guess. Anyway, Wednesday we've got Deere, some banks, Canadian banks on Thursday, which is, Canadian markets are open. U.S. markets are closed, so the Canadian banks active and reporting. No earnings for Black Friday. Stock market closes at 1 p.m., of course. So that's it for today. We've got some bump in China. Let's just take a look here quickly at where things might be at. Let's look at our futures here. So there was an initial uptick when things first opened at 6 p.m. Eastern time. They've tapered off a little bit here. S&P as well, down 0.17. NASDAQ down 0.35. Russell down just slightly, 0.04. Japan here with down 0.57. And the VIX is probably risen slightly, up 0.64, up into the 15s at the moment here. So let's take a look at bonds. Sorry, 10-year here. Slightly down. Let's look at our currency, US dollar, slightly tracking up. So at the moment, it's looking like a little bit of softness going into Monday, but that can change by the open, of course. But the week overall, historically, in my journal anyway, shows that you have to expect potential for a bit of bullish run as we approach holidays in general, especially the Thanksgiving one. And so again, it's a shortened week. It's only really 3.5 trading days. So fasten your seatbelts for any action and have a great time with your families for Thanksgiving, and hope that helps.